Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within financial filings. And today we've got a juicy one from Customers Bancorp, Incorporated, a company that seems to be playing a bit of a financial shell game. Now this filing is a Form 8K, which usually means something significant happened, and it is not just your typical quarterly update. Think of it as a company's way of quickly telling the world about a big event. And for Customers Bancorp Incorporated, that big event is related to a specific type of stock they have called Series F preferred stock. So what exactly is happening here? Well, it appears Customers Bancorporated is calling it quits with their Series F preferred stock. Calling it quits means they are deciding to buy back all of this stock. They're planning to do this around mid-December of 2025, and after this buyback, there will be absolutely no shares of this Series F preferred stock left. This type of preferred stock is generally less common than regular common stock. It is a bit like a loan to the company that gets paid dividends, but it has some special features. For investors, this redemption means they'll get their money back, likely with some extra compensation, but they'll lose out on any future dividends that preferred stock would have paid. For the company, it means they're cleaning up their financial structure. Maybe they think the interest rate on this stock is too high now, or maybe they just want to simplify their ownership setup. We also see their common stock mentioned here, which is the regular stock that most people think of when they hear about a company's shares. This is the stock that trades on the New York Stock Exchange under the ticker symbol QB. It represents ownership in the company and usually comes with voting rights. And then there is subordinated debt. Think of this as a loan that gets paid back after other, more senior loans if the company runs into trouble. Customers Bancorporated has some of this debt outstanding too, specifically their 5.375% subordinated notes due in 2034, trading under the symbol CUB. The report also confirms the details of their publicly traded securities. Their main offering is the voting common stock, with a par value of $1 per S-share, traded on the New York Stock Exchange under the ticker QB. Then there is the Series F preferred stock, the one they are planning to redeem. It also has a par value of $1 per S-share and is listed on the New York Stock Exchange with the ticker QBF. This preferred stock has a rather long name, which basically tells you it is a type of stock that pays a fixed dividend for a while and then can change to a floating rate. And the dividends are not guaranteed to be paid. And we have those subordinated notes trading as CUB, which represent a debt obligation with a specific interest rate maturing in 2034. The company also checked the boxes indicating they are not using special provisions for soliciting material or pre-commencement communications. This is pretty standard stuff, just confirming they are following the normal filing rules. Customers Bancorp Incorporated is not identifying as an emerging growth company. This means they are likely past the initial rapid growth phase and operate under more established regulatory requirements. Now, let's dive into the other events section. This is where the core of today's news resides. On the 30th of October 2025, Customers Bancorp Incorporated announced their intention to redeem all shares of their Series F preferred stock. As mentioned, this means they're buying them all back. This redemption is scheduled for the 15th of December 2025. The number of shares being redeemed is significant, 3,400,000 shares of this Series F preferred stock. This is a substantial chunk of that specific security, indicating a move to fully eliminate it from their capital structure. This report also tells us that the official press release announcing this redemption is attached as an exhibit. This is common practice, so anyone wanting the exact wording and details can find it. Under the Financial Statements and Exhibits section, we see the confirmation of what exhibits are included. Exhibit 99.1 is indeed the press release dated the 30th of October 2025, providing the official announcement about the redemption of the Series F preferred stock. Let's look at this from a higher level. Buying back preferred stock can be a smart move if interest rates have gone down since the preferred stock was issued. The company might be able to issue new debt or preferred stock at a lower cost. Or if the company has excess cash and thinks its own stock is undervalued, it might be a better use of funds to repurchase shares. However, we need to consider the context. What is the overall financial health of Customers Bancorporated? Are they flush with cash? Or is this a strategic move to cut costs because they're feeling financial pressure, without seeing their detailed financial statements in this particular 8K filing? It is hard to say definitively. Typically, preferred stock redemptions are announced in a press release that might offer more context. But here is what we can infer. The fact that they are fully redeeming this series of preferred stock suggests they are aiming for a simplified capital structure. It could also mean they are preparing for future growth or strategic initiatives, where having fewer outstanding securities makes things cleaner. It is also possible that the terms of the Series F preferred stock made it less attractive for the company to keep it outstanding, perhaps due to rising interest rates making its dividend costlier or the floating rate feature becoming unpredictable. Now, looking at the broader picture for Customers Bancorp Incorporated, they operate in the banking sector. This means their performance is heavily tied to interest rate environments, economic conditions, and regulatory changes. Redeeming preferred stock is a common tool for banks to manage their capital. It can impact their leverage ratios and their ability to issue dividends to common shareholders. If they're buying back this stock with cash, it might mean less cash is available for other investments or to absorb potential loan losses. If they are financing the redemption with new debt, it would increase their overall debt burden, which is something to watch. Ultimately, the decision to redeem preferred stock isn't just about financial engineering. It reflects the company's management's confidence in its future. By eliminating this specific class of stock, they're making a statement about their strategic direction. Are they signaling a period of stability and focusing on core operations, or are they clearing the decks for something new and ambitious? It is a question that hangs in the air. So, what is my take on this? Customers Bancorp Incorporated is making a decisive move to streamline its finances by eliminating its Series F preferred stock. While this can be a positive step towards a simpler capital structure and potentially reduce financing costs, the true impact hinges on the company's underlying financial health and the reasons behind this redemption. Without more detailed financial context directly in this 8, discerning the full story is challenging. However, this action suggests a management team focused on optimizing their balance sheet. A notable risk could be if the company is using borrowed money to fund this redemption, which would increase their financial leverage and potentially their risk profile. Conversely, if they have ample cash reserves, this could be a sign of financial strength and confidence in their future earnings capacity. This move, while seemingly technical, signals a deliberate strategy to reshape their financial future. What are your thoughts on companies redeeming preferred stock? Let me know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more decoded financial insights. And don't forget to join our Discord community linked in the description for more in-depth discussions. Thanks for watching, and I'll see you in the next one.